Hello traders, Gary Wagner here. Approximately 11 a.m. in Honolulu. It is Tuesday, the 13th day of December, and this is the daily report for gold and silver. After a Federal Reserve meeting comes out, saying very little, but in essence hinting at the fact that they will not be initiating a QE3. They won't be printing money. We see another hard sell within the precious metals markets. Those are drastically lower. Equities markets, which were up, those are lower. The only thing, once again, flight to quality, it seems, is the dollar. On today's daily report, I will talk about various pivot points that I'm looking at, potential bottoms in gold, as well as a market analysis in brief. All here on today's daily report. You know, traders, once again, we see a major breakdown in most of the markets except one, and this is the weekly chart, dollar index. You can see that it has gone really above the resistance area that it had in terms of closing basis. Some of the tops right in here. These are the opens, again, over here, right in this area. And you can see that there can be no doubt we've had a major breakout above that area. Next real set of tops, or what we should call any kind of resistance, is going to be right around the 83 mark, So you can see very, very dynamic move in the dollar index. Now, when we look at the stock market, you can see a market that has pretty much fallen out of bed along with gold. In terms of some of the pivot points, or where I would look for some potential support in the market, you've got 1215, 1203, and then 1190. Realize that the Dow has broken below 12,000 again. So as we look at this market, we see a market under significant pressure. And that pressure is carrying through, of course, also to the precious metals markets. Now, I've got a couple of different pivot points that I do want to talk about. This on a daily chart, and then we'll look at a 360-minute chart. But what I have done here, in essence, and let me see if I can't frame this all in for us, is I have taken a look at some of our basic bottoms. In other words, as a market has been trending higher and then retraces, that's that ABC right there, you'll then get that 5 count and the ABC, 5 count, ABC, 5 count, and then ABC, currently where we are right now. This is a intermediate, this is the minor, there's still a major on top of that. When we take a look, and I basically peg a couple of different areas for Fibonacci retracements, and I'm looking at the conclusion of these cycles, and that would be, of course, the beginning of wave 1, which is the conclusion of the C wave. And you can see from there, I've drawn retracements 1 here, 2, and then 3. And then in doing that, what we're able to do, and of course we've got the top up here at 1920 on all of them, are all-time highs. So what we get is a series, and you can see by the extensions themselves which excuse me, retracement sequence are coming by looking at these ends. These ends, of course, are going to correspond with where the incept or the beginning points are. We have pretty much barreled through a lot. My first target that I had as a potential pivot was 1633. Market seems to have gone through that, currently trading 1631. We'll have to look at that. The real strong targets, of course, I want to look at, we've got 1613 right in here, 1580, and what I think is a very, very strong, I don't think we're going to get there, but if we look at the bottom, this 1536, and you can see that comes from a pretty long extension there, you can see that that happens to correspond to the low that we got on this A wave. So that if what we are witnessing on this ABC is a flat, it would actually could carry us as low as 1536. So in terms of pivots, we are trying to determine right now if this is going to be a truncated, a flat, or a standard zigzag. And the only way we can really do that is to take a look at these different pivot points, see how the market reacts at these pivot points, look for candlestick patterns that are indicating reversals for us, and thereby giving us some idea of where this market might bottom. It's not so much a guessing game as it is a science, and it's a science of putting together a couple of different strategies and putting together different types of technical analysis, because fundamental analysis has really changed over the last couple of days, and that is where we looked at gold as a safe haven. What I'm hearing on the news and what the news pundits are saying now is that it's a risk investment as opposed to a safe haven investment. Now, I don't know who characterizes or who has the ability to change the underlying fundamentals behind a particular commodity such as gold, because it seems very, very odd to me that something can go from a safe haven investment to a risk on, risk off investment in a very, very short period of time, most importantly, without any real strong fundamental change in the marketplace. So we will have to see, and we will look at straightforward technical analysis, because that will have to guide us throughout. Silver is maintaining above $30, and that to me is what's critical right here in terms of where this market needs to stay above. It's this 30.23. You can see that this morning we had a low which touched upon it. Anything below it is a major break. Anything below this particular price point, meaning 30.23, and that's of course basis cash, the market really has nowhere to go but back to about $26. There's nothing really, in terms of a technical basis, there's no real support areas in between these two areas. So it's absolutely critical right now that this particular support area of 30.23 hold. Absolutely. And lastly, I want to go, this is a 360-minute chart. It has the same count as we were looking at in our daily chart, but the difference is it allows us to really isolate and look at the markets in terms of the minor counts in a much more complex way and give us some more defined numbers. Now, I talked about that first pivot point that I was looking at as 1633. And that comes from this particular Fibonacci retracement sequence right in here. You can see that we're right at that point. The market opened, it closed, and the low that it hit, of course, doesn't align with any of our major points, but this 1620, which is a 23% retracement of a much larger sequence. If it cannot hold this area, really our next target has got to be 1594. That is roughly the bottom of this particular dip. This is a minor B, so this would be an intermediate 5 to an A to a B. Within this B wave, you get basically a division where you get an A, a B, and a C. I would imagine that our final count is going to be something like 1, 2, 3, 4, and then 5. That's what I would imagine if we have a standard count. The count could end at 3, but we will have to see. There is nothing right now to indicate any potential support in this market, but that could change at a moment's notice. There's no doubt about that. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.